In 3, 2, 1. Ladies and gentlemen, welcome to Welcome with me, your host, Nova PM. We have a new president-elect for the United States for his second presidency. And let's just take a look what happened in the markets, and then we're going to go over our portfolio, how they did influence our portfolio. So, first of all, the dollar rose after his election. Initially, everything was kind of correcting. Everything was initially going to talk about the week from the 4th till the 8th of November. The election happened on the 5th. So, if you can remember our previous two risk assessment, you know that I told you that as soon as the presidential started, the risk rose. Now, what kind of risk? A decline in the market, but there was also a possibility of a acceleration in the market. And that's exactly what happened. So, we had our biggest fall here on the 31st of October, being exactly the week before, and that was on Thursday. Now, on Friday, the market started recovering, which was the 1st of November. Then we got a sell the 4th of November, where the market just literally didn't move for the entire day. And then we had the 5th with a minor jump, because pretty much Europe, until we hit 12 o'clock, the market pretty much knew who's going to be the president. Actually, the market was telling you who's going to be the president of the United States. And then after the election, we have the 6th, where the market has a big jump, and then the 7th and the 8th, Friday, closing everything up. Now, this could be the market peaking. I would be really careful from here on. If you positioned yourself before the election and you had some gains, maybe take some profit, because it could be that everybody's going to take some profit. And at the end, so the first 2 weeks of December will be that period where the hedge funds will de-risk and they're going to return some earnings to their owners. So they have to sell some shares, and there's going to be a decline in the first part of December and then a Santa Claus rally in the end. Now, this is not, of course, not sure to happen, but I would say it's probably pretty high. We're also going to do a risk assessment at the end of the video, so definitely stick around to the end. Now, let's get into our portfolio. First things first, let's talk about Bitcoin. Bitcoin rose due to Trump's election, and it went to new all-time high. This could be, again, a buy the rumor, sell the news. Bitcoin and Trump went hand in hand together, and now it's maybe a time to sell just a bit of Bitcoin if you had huge gains. If you're holding it forever and ever, then hodl on. Okay, now that's all I want to say about Bitcoin. So our eyes to, interestingly, gold and silver and all of the commodities excepting oil fell. This is basically baked in because of the Trump trade. Now, we could see oil pull back and gold start rising again, and also the Federal Reserve cut their rates by here are my iShares bonds, which I did, and come to that later on, which we love, did rise again at pretty much at the end of the week after the Fed meeting. So initially it was down, and then it rose after the Fed meeting because they did cut Federal Reserve, did cut 25.35 basis points once again, leaving it with for the years 0.75 basis points, and they are heading for a December. I believe it's 70% that they're going to cut in December. That will be a 1 basis point cut, a full basis point cut, which will be pretty much okay. That's going to push iShares Treasury bonds, long yielded Treasury bonds, even higher. And I honestly do not see, let's go to them, I do not see a decline in these anytime soon. So this is definitely, you can see on the MACD, it ripped, it just triggered the buy signal again, and it's now on a buy and going up. So let's see where it stops. It's going to be overbought once more, and then going to sold once more. Let's just draw here, trend line. So this is unusual due to the presidential election, most likely. But I would say that it's going to go up from here on. There's literally no reason why inflation should spike again. So in order for the Federal Reserve to rise rate again, this is much in a bell right at the end of the possibilities and probabilities. Okay, so that's it for the major economic news. Let's go over what we bought, what we sold, and why we did it. Now, this could be a mistake, but we did sell United Health and Bruce Financial. So let's go to United Health first of all. We did sell it on an initial pop, then it popped again. Maybe we should hold on to it a little bit more longer. I still stick to my initial thesis that if you have United Health, just hold on for it, do it to the end of life, and you're good to go. This is an exceptional, good dividend company. It is a good company. All in all, it's a great company. It has its hiccup, but it's all in all a exceptional company. Now, why did we sell it? Because this is basically a trade for us. Although United Health is a good company, I do not want to invest in them. They are pretty much overbought, and this period, let's take a look at them. They have currently a PE of 39.33, which is just massively over the S&P's regular PE, which is 10 and 25 or 15 and 25. But everything that is above 25 at the current moment, and it is not a growth company, I would say, well, correction is due. When, I don't know, but somewhere in the near future, a correction is due. So this is why we sold United Health. Then continuing on, we also sold Truist Financials. Ticker symbol TFC. We pretty much sold it at the peak after its initial pop. Then it went down. Here we sold it on the 6th, I believe. Yes, we did. We sold out of it on the 6th, and it was pretty much luck, but it went down once more. Now this pop, and I'm going to come back to this. This initial pop rose all water. Remember what Warren Buffett said, that when the tide retreats is where you see who's swimming naked. So let's move on to what else we sold. Because not only when the tide retreats, you see who's swimming naked, but also when the tide rises. When the tide rises, he said it lifts all boats. Now all boats that are not lifted in a rising tide are pretty much losers. And I'm going to release a video on how you should invest, how you should treat your investment. There are actually 10 to 15 rules that I pretty much follow. I do make mistakes. So this is why we sold a couple of companies. First of all, GameStop. GameStop was a trade for me. We made a bunch of money on GameStop. We bought back into it, and yeah, that was a bad idea. And got stuck with it. And on its initial pop, and right here on its initial pop on the 5th, we sold GameStop. We could have waited just a tinge more, and we could have made a lot of money, but we sold it even on a loss. Now, why did I sell it on a loss? Exactly what I told you. GameStop rose initially, then it went back down again, and it's going to go down, and I'm not going to stay there to see it fall. I'm just going to watch it from the sideline. So if the tide does not lift boats, then there may be you losers. Definitely sell your losers. Another company that we sold was iRobot, and this is actually after they reported earnings. Now, before they reported earnings, we waited, and just take a look at this. So this is the 5th presidential election. We sold it, and then it reported earnings, I believe, believe, on the 5th, and that was it for us. We got completely out of iRobot. This was a good idea, but it was badly executed. This is a long-term 2017. This company could return, maybe. I don't know. But for now, iRobot was basically this big pop here with the pandemic, but also the idea was that Amazon is going to buy iRobot. Why it popped. And after the deal fell through, so it didn't happen actually, iRobot just went down and it stayed down. And our decision was to sell it at a loss. So we sold GameStop at a loss and iRobot at a loss. Okay, now for the last company that we also kind of made a mistake was Neotech Metal. This company is, well, this is technically the company. Check this out right here. December, we bought this company initially at somewhere here. Then we made some money and then had a pullback, got back into it, and then we said, here is the right time to sell, and I didn't execute on it. And from here, somewhere here, I would have made 300%, where we made a minus 8 over 80. That's it. A loss for me. I have to stick to my gun and sell the losers, and that's why we got out of Neotech Metal that it was selling. We also reduced our position just a tinge, sold a couple of shares in FedEx. Now we do expect FedEx to the end of the year. Maybe it's going to have a pullback at the beginning of December, but till the end of December, we expect to be someone up here in the over 300 range, and then we're going to make another decision. But currently, FedEx is just halting around here. It's a good company. Should you hold it for a long time? I would say, I don't know. There's a lot of competition, but it does yield a bit of a dividend, and it was a good investment. We bought it really down here, so we are looking to sell it up here. But this sold all back just a thing because we need some money. We raised some money to buy one exceptionally good company that I was keeping my eyes on for a long time. There's even a second one, but I'm not going to tell you for now. I'll tell you when it's the right time, and that is Mercado Libre, the company that we bought. We bought a couple of stocks in Mercado Libre on a big pullback here. They reported the earnings and the revenue met expectations, but so they met expectations on revenue, but they missed on earnings. 21.68%. Now, this is not a bad company. It's a really good company. It has kind of a Amazon for North America, and it is an e-commerce platform, so it has a huge moat. It has literally no competition.